Hello and welcome to the program Capital Market. I'm Temple Ashaju. Thank you for joining us this weekend. Inflation data for the month of June 2020 was released yesterday by the National Bureau of Statistics, NBS. The reading trends upwards for the 10th consecutive month in a row to 12.56%, indicating the direction of the economy ahead of the much anticipated economic recession by the fourth quarter of the year, and pointing at a major decision mechanism for the Central Bank Monetary Policy Committee, which will be holding on Monday. While market watchers track the outcome of that meeting, investors are also keeping their eyes on the half-year company results, which should begin to find their way into the market next week. Meantime, let's take a look at some of the news that we have. The Debt Management Office, DMO, this week released the bonds issuance calendar for the third quarter of the year 2020. In a bid to deepen the sovereign curve, the agency introduced a new 25-year paper as a fourth tenor on offer. According to the calendar, between 340 to 460 billion naira worth of bonds are to be offered during the quarter, with the reopening of a 5-year paper, 15-year paper, 30-year paper tenor, and of course, the new issue of the 25-year tenor. And now the Capital Market Support Committee for COVID-19 is ramping up fight against the coronavirus pandemic with the donation of 2 ambulances and cash contributions to cushion the effects of COVID-19 in the system. This follows the delivery of a unit each of ambulances from the Nigerian Stock Exchange and the Central Securities Clearing System, the CSCS. Other pledges by the Securities and Exchange Commission-led initiative includes the commitment of 100 million naira to the cause by the CSCS and a redeemed promise of over 80 million naira by the Nigerian Stock Exchange. Now, the committee, which seeks to complement the efforts of the federal and state governments, looks to stem the spread of the coronavirus, has also donated one of the ambulances to Kano State's government. And the Nigerian Stock Exchange on Thursday listed 11.5 billion naira Series 1 bonds of gas to power company Axela. The 14.3% fixed rate bond is due 2027 under a 50 billion naira bond issuance program. Axela facilitates cost-effective power alternatives for some 175 industrial firms, including some NSE-listed companies such as Nigerian Breweries, Dangote Sugar Refinery, Flour Mills of Nigeria, and Boa Group, and of course, PZ Cousins, which is a consumer goods company listed on the Nigerian Stock Exchange. Now, payments processing company and NSE-listed entity eTransact International has proposed the rights issue of 4.66 billion ordinary shares of 50 kobo each at 1 naira 50 kobo per share. This is on the basis of 10 ordinary shares for every 9 ordinary shares held as at March the 25th, 2020. Subscription and acceptance list for the offer opens this week on Tuesday, July the 14th, 2020, and closes on Monday, August the 10th, 2020. Now to our discussion segment. About 2 months ago, the Chartered Institute of Stockbrokers got a new administration to steer its affairs for the next 2 years under the leadership of Mr. Olatunde Amolegbe, who was elected as president in May 2020. Mr. Amolegbe succeeds Mr. Dapo Adekoje, whose tenure expired about the same period after his reign for 2 years. Now, the new administration of the CIS is coming at a time of huge economic uncertainties, and this places a lot of expectations on the new president as the capital market grapples with speculations of another recapitalization exercise just about 3 years or thereabout after the broker-dealer community of the exchange succeeded in shoring up their capital base. But joining us now to bear his mind on this development is the new president himself. That's the president of the Chartered Institute of Stockbrokers, Mr. Olatunde Amolegbe. Thank you very much for joining us on the program. Good evening to you, sir.
Good evening, Temple. Glad to be here.
So let me start by saying congratulations to you on your, of course, election as the president of the Institute. But what are you bringing on board for the stockbroking profession and, of course, the capital market at large, considering the changes that we've seen with the uncertainties that we are currently experiencing in the economy?
Well, thank you, Temple. As you know, for the CIS, leadership is a continuum. I've served 4 years as a principal officer before being elected president. The plan is to continue the good work of my predecessors. The intention is to take CIS to the next level regarding education, regarding training, regarding advocacy, all those good things that my predecessor did. We intend to move them to the next level in this new administration.
Oh, okay. So, what would operators prefer to get from the regulators at this point in time, when we are hearing insinuations of regulators looking to increase the capital base of the market again? This is coming after just a few years of the same exercise that happened in the market, and it led to the reduction of the numbers of the stockbroking firms and, of course, dealing members of the Nigerian Stock Exchange. What are your views on this, and how are you handling that?
Well, I mean, to the best of my knowledge, there has not been any official communications from the regulators regarding that. But if you ask me personally, on the short run, whether we need to be talking about recapitalization now, on the short run is an open question. Medium to long term, the decision as to whether we need to recapitalize or not will remain in the hands of SEC, who has the ultimate authority to ensure the fair and orderly growth of the marketplace. But short term, I believe that all hands have to be on deck to try and ensure stability of the market, ensure the markets are working well, despite the unusual times we are in. And I will say that anything that will, cause, if you will, a distraction should be avoided.
So the Securities and Exchange Commission, of course, has a new Director General now in person of Dr. Lamido Yuguda, of course, who was also a commissioner or a member of the board before now. But what are your expectations from him at this point in time? What would you rather want him to do, given the current circumstances we are seeing in the market and, of course, in the economy at large?
Clearly, the new SecDG is coming at the just time market and economy as a whole. What I've heard him say through the media is that he intends to continue to run with the capital market master plan that the market has been implementing for a couple of years now. And I feel that is a good thing. The capital market master plan has some very, very good programs and some very good policies in it. If he decides to run with that, which is new administration, I think that will be good for the markets.
Now, talking about the implications or impacts of the COVID-19 on the market, what are some of the mitigants that you think should be applied at this point in time to mitigate all of the risks that we are having in the system, and, of course, as part of the strategies that should be considered for post-COVID-19 recovery?
COVID-19 situation, pandemic is clearly a one in a lifetime event. The luck we've had is that the leadership of our platforms have been forward-looking and have put in place enough programs to ensure that the markets continue to operate seamlessly, even during the pandemic. So we're quite lucky regarding that, and kudos to the leadership of the stock exchange and all the other platforms. Having said that, as I've mentioned before, the need to maintain stability is very key at this time. So anything that will enable the market to continue to function properly, we need to do. So how do we get liquidity into the market? All right. If you think back, 2006, 2007, the market saw unprecedented growth, and that came from the fact that there was easy access to liquidity to operators. So whatever we can do, either from the CBN level or SEC level, to ensure that liquidity flows to operators and flows to the market and keeps the market running and keep us being able to execute client transactions, keep us being able to ensure good price discovery, will be good generally for the market, because good price discovery means that companies can easily come to the market to access capital, increase their production, create employment, and it will be a win-win across board. There are a few other mitigants that I can think of. I mean, we've spoken about the issue of unclaimed dividend in this market over and over again. I think that the collective effort of all market stakeholders to try and at least, tackle that issue will have significant physical and psychological impact on the marketplace. There is also the issue of multiple taxation in the market. It's been spoken about severally. That is an issue that, not only affect market operators, also affect the investors that actually bring money into the market. Anything that can be done to ensure that taxation in the market is streamlined and it is competitive compared to our peers in other jurisdictions would always help our market. So a few things I could think about, but those are the three that jump at me at the moment.
Mr. Amolegbe, despite the COVID-19 crisis that we are having at hand, we have seen a lot of corporate bond issuances in the market. Why are we not seeing companies, entities leveraging opportunities or options or alternatives rather, like IPOs and co? The only primary market activity that is closest to that seems to be rights issue at this point in time.
Firstly, most of those offers you are seeing coming to the market, even during the pandemic, have been, results of work that have been 1 or 2 years in the planning stage. I mean, and they are just coming in now. They just happen to be coming in now at during this particular period. I will assume that without the pandemic lockdown, maybe even more companies will have been able to open offers of debt and equities and be able to close deals during this period. So these are, offers and deals that have been in the pipeline for a while and are just being closed now. I mean, again, kudos to our regulators, kudos to our platforms that ensures that, the pandemic did not shut those things out totally. They were able to open and they were successful. What I see is a situation where most corporates will reassess their capital situation post-pandemic, and they will come to a decision as to whether there's a need for them to come and issue shares in forms of subscription or right issue, post-pandemic. I mean, I will assume that a lot of companies are doing a lot of stock taking now, looking at their capital structure, and ultimately come to a decision as to where they want to go. I do not expect to see a slew of subscription coming into the market at the moment.
Okay, on the market straight, I hear a lot of complaints like I bought shares of so company at so amount, and of course now it has depreciated. I've lost more than 70% in value. I mean, Mr. Amolegbe, what do you have to say to such retail investors who are watching you at this point in time?
First of all, we must realize that the market, the stock market generally is the barometer of the economy. Where the economy goes is where the market is going to go. So if the economy in general is not showing, significant improvement, we shouldn't expect that the companies in whose shares we are trading, should perform otherwise. Having said that, we've always said that the stock market should typically be treated as a long-term market. All right. You take a position in stock, try to give it enough time, try to give it enough gestation period for it to deliver the right returns. And importantly, always ensure that you consult with your stockbroker before taking any decision regarding what to buy and what to sell. They are the ones that have been trained by the CIS, to provide the correct advice as to what to buy and what to sell and when to exit positions. So, I mean, in as much as we will not people will not be expected to treat their ailments by themselves, but expected to approach their doctors the same way when it comes to, taking investment decisions. Always make sure you are close to your staff and ensure that you talk to them regularly, and they will provide you the right advice as regarding, exit and entry.
It's really been a pleasure having you on the program this evening, Mr. Olatunde Amolegbe, the president of the Chartered Institute of Stockbrokers. Thank you so much for making out time for us on the program. We appreciate your time.
It's been my pleasure, Temple. Thank you.
Thank you. Well, 60% shares of NSE-listed company Omoluabi Mortgage Bank is now being acquired by a Pan-African financial services provider, Citigroup, City Trust Group, precisely. Well, post-acquisition, Omoluabi Mortgage Bank, the only state-owned company on the NSE, will be rebranded as Living Trust Mortgage Bank. We're joined now on the program by the Group Chief Executive Officer of City Trust Holdings, Mr. Yemi Adefison, to drill down on the objectives of this takeover plans of Omoluabi Mortgage Bank. Basically, what are the circumstances that led to this acquisition strategy?
Okay, City Trust Holdings PLC. It's a conglomerate focusing on financial services. So what we are looking at, it's how to develop the mortgage sector in Nigeria, which it's quite on the low trends. As of today, we have about 22 million of mortgages to be created, and it's increasing year by year. So we felt that Omoluabi being a good vehicle for us, we could acquire and be able to start creating those mortgages for us. Populace in Nigeria.
This information is not so much out there in the investing public space. I'm not sure some regulators are aware of it right now. But what exactly is delaying the process of pushing out that information? Okay,
we actually started this transformational journey in September last year. And what we have done is just to commence with the acquisition. The next phase, what we have achieved again, is also the AGM, which have approved the name change. So we are expecting the regulators, CBN, the NSC, to give us the approval. Then it can become a glaring situation in the capital markets subsector in the financial sector in Nigeria.
So prior to now, we know of that the bank had an expansion plan. That Omoluabi Mortgage Bank had an expansion plan because it used to be a savings and loans company, and then it's upgraded to Omoluabi Mortgage Bank status. Then got listed on the Nigerian Stock Exchange. At a point, it was even owned by Living Spring company limited, and then all of this back and forth we've been seeing lately. But what are the strategies to reposition this firm post-acquisition?
Okay, the first thing we are looking at is to see how we can come up with increment in share capital of the organization of the bank, with increasing to about 5 billion share capital, so that we can operate as a national status with CBN.
So the status is going to change from state-based status,
to the national status, and we are going to have offices in Abuja, Lagos, and then Port Harcourt as well. Lagos being the major market for the mortgage banking subsector in Nigeria. So that's the first stage of our acquisition plan. The second plan is to now increase our tier 2 capital of the organization. We have looked at several methods. We are looking at increasing the share capital also as well, and in the nearest future from that same 5 billion, and also the debt capital market by increasing it to up to like 10 billion in the nearest future, so that we can be able to create more mortgages in this sector.
So what for you are the attractions in the mortgage market in Nigeria, considering all of the regulatory headwinds that we know of?
Okay, number one is that there's a need. When there is a need, that means there is an opportunity. And the opportunity here is that we have a very short mortgages available in Nigeria. And like I said earlier on, we have still about 22 million housing units to be created. Each year, we have about 700,000 housing units to be created, and this is still a lacuna in the system. So for us, we saw the opportunity. We saw that the fact that we can be able to do this together with other regulators and other operators in the industry, so that we can take the mortgage sector into the level at which it should be. We're already working very well with NMRC, Nigeria Mortgage Finance Company, and we're also doing that also with NMWFL, which is Mortgage Warehouse Funding Limited, to create a pre-financing and also refinancing of the mortgage as well. While we're also talking to our investors outside the country to see how we can bring in all this capital into play, and we can be able to reduce this. By and large, the second thing is also to create jobs. Our focus in Africa is to create jobs and multiple jobs across where we operate. So you can, you understand with me, by the time we continue to create more mortgages, we are going to create jobs for those people in the real estate sector. Those both skilled and unskilled will have jobs at this time around. And our focus is to create more of these, take the balance sheet size of Omoluabi to about 20 billion within the next 9 months of our full acquisition.
And what mode will this capital raising take?
Like I said earlier on, we are looking at partnering with the debt market sector, where we are talking about coming up with an SPV vehicle to be able to do debt market in Tier 2 with FMDQ. We're also looking at what we can also do in terms of bringing more capital to the stock market as well. All these are still in play, and I'm sure by the next 9 months,
of instruments that you're going to leverage.
by nine months, we should be seeing a very clear, big player in the industry in terms of mortgage banking in Nigeria, and that's what we are going to do in the next 9 months.
What's the spread of the assets at this point in time? Talking about the housing assets, fiscal assets that the company has, and who then goes ahead to now bear the responsibilities of all of those obligations that you have outstanding at the moment? Yeah,
see, for us, our strategy is also about our takeover is an acquisition, as the case may be, is also to run the organization successfully well. So we are taking all of this up. We're also talking to those who are already have been playing in the industry before, those who own the bank, and say, okay, fine, this is what we want to do in terms of making this asset an income-generating asset, an asset that will have a great impact in the balance sheet of the organization. So we're taking all of it together and coming up as a fresh living trust mortgage bank PLC in Nigeria. So we also know that some quasi-regulators, you mentioned FMDQ earlier, which is where you become leveraging some debt program eventually. Of course, I believe that will also be listed on the Nigerian Stock Exchange. Exactly. You can list both ways these days. But so you have these quasi-regulators currently talking about securitization of the mortgage market in Nigeria. What for you are the opportunities in that sector, that form of strategy? Okay, I first of all want to quickly delve into the challenges we are facing. It's just about the perfection of the title of these assets. And of recent, you realize that the NMRC MD went throughout some of the state government to see how we can do that together. So for us, we have made a lot of progress with the operators and also the stakeholders in the mortgage banking sector to see how we can see how these assets can easily be transferable and can still easily be generating those assets. But first of all, what we are doing is to create more of these assets, because what we have now as a bank is still very few, and we're going to see how we're going to bring a large chunk of these assets together with our partners and see how we can go and do that. No, the issue of securitization in Nigeria is still developing, and we hope that SEC, coming up with a draft policy on it, will be able to fast track the implementation, and we can quickly go into it and do it. For us, it's a welcome idea, and we believe it's going to be a good part of our business acquisition. There's also the issue of foreclosure law in Nigeria. I'm not sure it's been updated for a long time in the country. How are operators like you grappling with that? You see, there are several issues, and well, like I said earlier on as well, when we see a challenge, we turn the challenge into opportunities. We are a major player in the industry in Nigeria, and we're talking with all regulators, government, establishment, MDAs, and also those who are in the land registry to see how this issue of title or title perfection can be resolved as soon as possible. As we speak, once you have your filing for your title, NMRC is ready to deal, which is a good one. And we believe that as soon as we move to the next phase of the mortgage banking sector transformational journey, we'll be able to get all these things done as soon as possible. Because the issue of mortgage is about social and economic value. The government, part of their campaign is always to say, okay, I'll create more housing units. And they need us to do those things. So we're partnering with them. We're partnering with all we can do. The Mortgage Bankers Association of Nigeria, the one that promoted about 7 years ago the NMRC, and look at what we are doing today. What bank also gave them money to be able to disburse to mortgage bank. So for me, it's a good environment for us to display our intellectual and also our strategy in terms of transforming the whole sector together. This whole takeover plan is coming at a time when we're seeing so much of economic uncertainties hitting companies, job losses, unemployment rates rising, and you have mortgages in Lagos and across board. Of course, a lot of those mortgages are not doing really well because we've been seeing defaults left, right, and center. How are you going to be coping with that when you venture into it deep? Okay, fine. The major challenge most of our partners do have is there was no thoroughbred business plan before you go into doing mortgages. And that's why you see a lot of mortgages being created and people who are not be able to afford it. So first of all, what we are looking at is affordability. And what we are creating is the retail aspect of it and to grow it bigger. So somebody could come up and say, okay, I want a mortgage of 5 million, 3 million, 7 million, and we could be able to create that market for us. And because we also have partners in the industry, So we have a partner stakeholders meeting with the real estate developer. We look at those things very well and see how we can do it. So for us, it's like we are not even doing more what we can do. We are not creating a mortgage that is only be open to not being acquired and purchased. So we are doing a lot in terms of partnership and talking to regulators to see what we can do to make sure that things work out fine. But for us, it's like we haven't created more jobs. And I'm sure that our bank has also increased the number of staff that we have today. We are creating more, and the footprints are always there. Everywhere and there, we are creating more of these mortgages for our
And let us
companies.
hope that this coming week, I mean, the regulators will be able to respond quickly to your yearnings, especially at the CBN level, so that we can have this information in the public space, and of course, everyone can watch out for what Omoluabi Mortgage Bank will become in the near future. Mr. Yemi Adefison, Group CEO of City Trust Holdings, thanks a great deal for joining us on the program this evening. We appreciate your insights on this transaction. Thank you so much.
Thank you.
And on that note, that's it on the program for this weekend. Thank you for being a part of it. I'm Temple Ashaju. I'll see you next time. Bye for now.